The crypto AI sector moves at an aggressive, almost chaotic speed. Projects appear out of nowhere, scale massively overnight, and crash just as fast. Take Sentient. This specific token just logged a massive 20% price jump in a single 24-hour trading window. But look at this split-screen graph. While the left side captures that sharp daily spike, zooming out tells a completely different story. Sentient is still sitting nearly 75% below its all-time high. That severe contrast leaves anyone looking at this asset with a very specific problem to solve. You have to figure out if you're looking at a temporary dead cat bounce or the beginning of a massive, sustained AI narrative run. To actually make that call, you have to strip away the hype of artificial intelligence entirely and look purely at the underlying mechanics of the token itself. Sentient, trading under the ticker SENT, is an Ethereum-based Ethereum token rather than a standalone coin on its own blockchain. The project's stated mission is building what they call decentralized AGI, or artificial general intelligence. This matrix breaks down their strategy directly against traditional development. On the right, you have the closed, walled garden corporate model of standard AI labs. On the left, Sentient's pitch, an open-source, globally accessible infrastructure alternative. It has serious financial weight behind it. Sentient is actively backed by major blue-chip crypto venture firms, specifically Pantera Capital and Founders Fund. But buying into that vision comes with a severe trade-off. Gaining direct crypto exposure to this sector means you are placing a bet against vastly superior, multi-trillion-dollar corporate monopolies. Sentient is fighting industry titans using technology that is largely unproven. Because of that, its immediate survival depends heavily on the strength of its crypto narrative, rather than broad, real-world adoption. Let's look at the financial structure. Right now, Sentient holds a market cap of roughly $137 million. But as this flowchart shows, the total token supply splits drastically. We have a small pool representing the 21% of tokens actually circulating on the open market, sitting next to a massive locked vault holding the remaining 79%. That tightly restricted circulating pool creates an artificially low float. It allows narrative-driven hype to easily grab hold of the token and rapidly push the price up. Then the other side of the equation kicks in. That massive 79. Mechanically, as those locked tokens are released over time, they flood into the active market. That constant addition to the supply actively suppresses the token's price, no matter how much positive buzz the AI narrative generates. It creates a ticking clock. Short-term momentum works beautifully as a trading engine, but structural dilution acts as mathematical gravity for long-term holders, which means we need to look at exactly how Sent is trading today. This technical line chart tracks Sentient's recent price history, establishing a flat baseline right at its current trading level of roughly 2 cents. Zooming the chart out reveals the context of that price. In mid-November 2025, Sent hit an all-time high of 7 cents. The gap between that towering peak and our current 2-cent baseline represents a massive amount of lost ground. Looking closely at the curve, the next critical hurdle is clear. There is a heavy horizontal resistance line sitting right at the 4-cent mark, acting as a direct ceiling over the current price action. For buyers entering at the current 2-cent support level, the upside is highly visible. If momentum breaks through that 4-cent ceiling, it represents a clean 100% gain. On the bearish side, if the asset tests that 4-cent level and fails to break through, the rejection will likely trigger a rapid, immediate sell-off. The technical setup makes Sentient a hyperactive trading vehicle. It requires constant monitoring, rendering any passive, long-term holding strategy exceptionally dangerous under current market conditions. Given those mechanics, you have to decide exactly who this asset is actually built for. Let's take the momentum trader first. For this profile, Sent is a solid watch or buy. The Tier 1 venture backing and the very real AI crypto narrative provide excellent fuel for a technical breakout. Then we look at the fundamental, long-term investor. For them, this is a strict avoid or wait. The AGI promises are completely unproven, and the eventual release of locked tokens makes heavy dilution a mathematical certainty. The exact same token can be a perfect setup for a nimble trader and a value trap for a fundamental investor. Surviving in crypto requires tightly aligning the asset with your specific time horizon. If you decide the mechanics align with your strategy, this decision matrix maps out your options. You can trade Cent right now on Binance, Coinbase, or through decentralized exchanges on Ethereum, like Uniswap. Keep in mind, this breakdown is not financial advice. You're responsible for verifying the data and doing your own personal research before making a move. If you found this breakdown helpful, drop a like and subscribe for more daily analysis. And let me know in the comments, are you playing the short-term momentum or staying far away from the dilution? In the volatile crypto AI space, knowing when to walk away is just as vital as knowing when to buy in.